Hello and welcome. Yesterday, bulls made an attempt to break above 1.0603 but failed. The European currency came under pressure again amid downbeat data on consumer confidence in Germany and in France. As a result, the euro-dollar pair slid, returning to the level of 1.0500. Statistics from the United States were not of great interest. US house prices remained elevated and the goods trade deficit narrowed. Although the US economy is gradually entering a recession, all this indicates a stable and healthy economic environment. Against this background, demand for the greenback continues to grow. Today's macroeconomic calendar is full of important releases. Numerous ECB and Fed members, including ECB President Christine Lagarde and other senior political figures, are set to speak today. By the way, in a statement yesterday, Lagarde expressed worries about mounting recession signals, but noted that the situation would not stop the regulator from raising interest rates more aggressively. Notably, the first rate hike is scheduled for July. Besides, the head of the European Central Bank voiced concern over higher government bond yields and called for a more serious attitude towards new measures to support the economy discussed at the last meeting. Today, the euro area will report data on consumer confidence. The indicator is forecast to remain unchanged in June. Traders may also take note of Eurozone economic sentiment in industry and the services sector. The focus of market participants will be on Germany's inflation rate and US gross domestic product. German consumer price inflation is expected to ease slightly in June. As for US GDP data, experts estimated the economy contracted as a 1.5% annual pace in the first 3 months of the year. From a technical point of view, it's worth focusing on the level of 1.0497. A false breakout at this mark will create a buy signal. Thus, bulls will try to regain control of 1.0552, the middle line of the sideways channel. If the price consolidates above this level and tested from the top down, the euro will advance to 1.0603 and then probably reach 1.0640 and 1.0663. At these two levels, I recommend opening short positions on the rebound. Likewise, short positions on the rebound can be considered at 1.0603 with a view to catching an intraday correction of 25-30 pips. If the price forms a false breakout at 1.0552 or fixes below 1.0497 and tested from the bottom up, the euro will most likely head for the new annual lows. In this case, the price is expected to slide to 1.0448 and then 1.0388. At the level of 1.0388, it will be possible to go long on a rebound, counting on the intraday correction of 25-30 pips. Long positions at 1.0448 can be considered only amid a false breakout. Speaking of the British pound, I think that particular attention should be paid to the area of 1.2171 and 1.2165. If bulls take the lead and the price forms a false breakout in this range, the volume of long positions will increase. In this situation, one can count on a rebound to the level of 1.2244. If the price consolidates above this mark and tested from the top down, the British pound will have every chance of rising to 1.2317. At this level, it will be a wise decision to open short positions on the rebound with a view to catching an intraday correction of 30-35 pips. A false breakout at 1.2244 or a price fixation below 1.2171 will increase pressure on the pound sterling. In this case, the pair is expected to dip to 1.2101. At this mark, long positions can be considered only amid a false breakout. Alternatively, traders may go long on the rebound at 1.2030, hoping for an intraday correction of 30-35 pips. Good luck.